If you had invested $1,000 in NVIDIA 10 years ago, you wouldn't just have double your money today. You wouldn't even have 10 times your money. You would have over $250,000 sitting in your account right now. Yes, I cherry-picked the stock, but that is the potential power of the stock market. But to get there, you have to understand what you are actually buying. Welcome back to Epic Finesium Odyssey. Today marks the beginning of a brand new learning series right here on the channel. I'm going to be breaking down different concepts of investing and money, step by step, to help you navigate the financial world. And this is episode 1. Now, before we dive in, I need to make a quick disclaimer. I am not a financial advisor, and this is not financial advice. This series is for educational and entertainment purposes only. Please remember that with all investments, there are risks involved. You can lose money, so always do your own research. With that said, let's strip everything back to basics. We're going to explain what a stock is, why they exist, and the difference between those confusing symbols like GOOG and GOOL. So first things first, what is a stock? Imagine a company is like a giant, delicious pizza. A stock is simply a slice of that pizza, and a ticker is a short code that identifies a specific company or security on an exchange. For example, AAPL is the stock ticker for Apple. When you buy a stock, you aren't just betting on a ticker symbol moving up and down on a screen. You are buying a tiny piece of ownership in a real business. You become a part owner. If that company is the pizza, you now own a slice of the cheese, the sauce, and the crust. You are a shareholder. Now, why would a company want to do this? Why would a founder want to sell off pieces of their business to strangers like us? The answer is usually growth. Let's say you start a lemonade stand. It's a huge hit. You want to open 10 more stands, but you don't have the money to buy the lemons, the sugar, and the wood. You have two choices. You could go to a bank and take out a massive loan, which you have to pay back with interest no matter what, or you can go public. This means you issue stock. You sell slices of your lemonade empire to investors. In exchange for their cash, you get a piece of the company. You get the money you need to expand without going into debt, and the investors get to own a piece of a growing business. But here's where it gets a little tricky. Not all slices of the pizza are the same. This is where we get into share classes, and the best example of this is Alphabet, the parent company of Google. If you look up Google stock, you'll see two different tickers, GOOG and GOOL. They look almost identical, but there's a key difference. GOOGL represents Class A shares. These come with voting rights. If you own these, you literally get a vote at the shareholders' meetings, almost like a political election, on how the company is run. GOOG represents Class C shares. These have no voting rights. You still own the slice of the company, and you still make money if the stock goes up, but you don't get a say in the decisions. And just to make it more interesting, there's also a Class B. You can't buy these. These are held by the founders, and they usually get 10 votes for every single share. This ensures that the people who built the company stay in control, even if they sell off a lot of the other shares. So what do you typically get when you buy a share? First is capital appreciation. That's just a fancy way of saying the price goes up. Like that NVIDIA example at the start. You buy low, the company grows, and you sell high. The second thing is dividends. If the company makes a huge profit, they might decide to share that cash directly with the owners. They cut a check just for holding the stock. It's literally your share of the profit. So to recap, a stock is a slice of ownership. Companies issue them to raise money for growth, and different share classes like GOOG versus GOOL tell you whether you get a vote or just a ride on the rocket ship. I hope that clears up the mystery. If you found this informational and helpful, please click that like button. If you want to follow along with the series and continue your journey to financial clarity, make sure to hit that subscribe button. Thanks for watching Epic Finesium Odyssey, and I'll see you in the next one.